Assalamualaikum to all. We are now in chapter 3 and we will be learning further on another investment topic. In this chapter, I'm pairing with my assistants from US to explain to you the specific topics on investment information and securities transaction. Four main objectives of this chapter includes to discuss the growth in online investing together with the pros and cons of using internet as a medium of investing, to identify the types and sources of investment tools and information, to explain the key aspect of market averages and indexes, and finally to review the services and transaction process involved in dealing with stockbrokers. Okay, we are now going to listen to my assistants on the online investing.
Hi everyone. Before we begin, let me introduce myself. My name is Grace and I'm from United States of America, and I'm more than happy to assist Dr. Carmela. Now, let's get started with online investing. The internet has empowered individual investors particularly by providing information and tools, and also by simplifying the investing process. The time and money it saves are huge. And one of the example is the reduction in transaction costs and fee which associated with traditional brick-and-mortar brokerage firms. With online trading, investors can execute a trade almost immediately. Investors can also get the most current information, which includes, but are not limited to, real-time stock price quotes, data on market activities, research reports, companies' update, various investment tools, or even a professional analyst's recommendations. Although online investing continues to grow in popularity, there's always a word of caution about internet trading. Trading via the internet requires both experienced investors and novice investors to exercise caution, because there's always a possibility of making poor investment choices or overinvesting. Online traders are left to their own decision because basically, they don't have the safety net of a live broker that can provide information and suggestion and at certain period, how they should rethink on a trade. Besides, some studies noted that trading online can develop an addictive nature to some investors. This type of investor frequently involves trading in risky stocks that offer the potential for large gains, but also a significant losses. More frequent trades mean higher total transaction costs and could take longer time to recoup the total costs of the investment. So, experts often stress the importance of research and analysis, particularly for new traders. You need to spend time to research about the companies in which you're interested to invest, which includes, but not limited to, its management, business background, profitability, as well as the company's future planning. The bottom line is, don't let the speed and ease of making transactions blind you to the realities of online trading. Now, let's move on to the next slide. Once investors have familiarized themselves with basics of investing, they can begin to plan and set their investment goals, find securities that meet their objectives, and start to organize their investment portfolio. Nowadays, many tools once used by professional investment advisors are now freely available through online. These tools, such as financial planning calculators, stock screener, technical charting, stock quotes, and portfolio tracking, are all available to investors. Those can be accessed at many general financial websites, brokerage or investment banks, as well as at website of our local exchanges, which is Bursa Malaysia.
Example of free investment tools that is available and useful for traders in our market. So you can go to www.bursamarketplace.com. And as you can see here, this website is not only built for the beginners, okay, but it also useful for intermediate and advanced investors. And if you click at the various icon up here, you can see all the drop down with many interesting items to be explored. Okay. Now let me show you one of the interesting investing tool here. Okay, we call it a screener. So the stock screener is designed to help you to find stocks that match with your investment strategies and criteria. Okay, so basically it allows you to screen for stock using the broad range of financial parameters. Now let's say you want to know what stocks to buy based on analyst recommendation. So you can click here, you click buy, and further down, if you want to know on the specific industry, so you can choose from these various industries. Okay, let's say you take healthcare, and down here are all the financial parameters if you wish to be more specific in your stock selection. Okay, let's say you choose on the share price. Okay, you want to choose above 1 ringgit, right? Finally, you can see total matches of your search from here. So after you get the total matches with the specific criteria, then you can further learn and understand on the companies listed from the result. Okay, from here you can see only one total match. Okay, only one company. All right. I hope with the brief explanation just now on the stock screener, it will trigger you more to explore on the other investment tools available online.
Thank you, Dr. Carmela. Okay. The next step is to search for the reliable investment information. Whether it is descriptive or analytical information that you get from the internet or printed sources, what most important is for you to assess the risk and return profiles of the possible investments. There are two key elements in searching for the information. First is descriptive information that involves with factual data on the past performance of the company, the financial markets, an industry, a company, or even a specific investment. And secondly, analytical information, which normally presents projections and recommendations about possible investments based on current data. There are many excellent free sources of investment information available online and in other forms. It can be obtained from financial journals, institutional news, business periodicals, government publications, or from any special subscription services, such as brokerage reports and investment letters. Investors also may find specialized sites on equities, bond, mutual fund, international information, as well as discussion forums that discuss on individual securities and investment strategies. So far, you've learned the important aspect of an informed investors. But even as an informed investor, with the ease of which the information is being available today, due to the rapid changes of communication technology, it makes much easier for scams artists and others to evolve and advance too. This type of opportunist tends to spread false news and manipulate information for their own monetary benefits. Anyone can sound like an investment expert online, posting stock tips with no underlying substance, predict the next direction of stocks prices, and etc. And because it is hard to know the qualifications of the person who's posting online, investors must do their own homework, digest and rationalize the information provided before acting on any online tips, in order to avoid from becoming a victim of an online scams.
Do you still remember that I shared with you on how you can make use of stock screener tools from Bursa Marketplace website? Now let me quickly show you on what types of investment information that you can get from the same platform. So we will take it from here. Okay, let's say I choose analyst recommendation to buy, and industry. On the industry, I choose consumer cyclicals. Okay, with the share price above 1 ringgit, now you get total matches of 7 companies. So click here to show the result. And here are the list of the matches. So you can choose any specific company for you to dive further on the descriptive as well as the analytical information before you decide to buy the stock. Let's say you want to know information on Focus Point Holdings. Right, so you click here. Okay, now it will bring you to this page where you can start exploring the information that you need. Each of these tabs provide you with specific factual data and financial analysis about this company. You can see the profile of the company. These are the charts. Okay, you can go to research, for example. On the financial, you can get all the key statistics, income statement, balance sheet, and also cash flow for the companies. And you can see the ownership of the companies. The list of investors who become the major shareholders. You can even access to the news specifically related to this company. And finally, if you wish to read the detailed stock report of the company, you can also download the report from here.
We now move on to the next topic, understanding market averages and indexes. News reports about the stock market index that you see or hear every day on a TV or radio track the movement of groups of stocks. This is, however, is not specifically related to any individual stock issues. By citing a specific index or average, these reports actually give you a general sense of the direction of the stock prices, which also reflects as a barometer in capturing the general mood of the market conditions for the day. Thus, by understanding the meaning of these reports is important, due to the fact that they are commonly used as benchmarks, which used to measure the performance of individual stocks. At their most basic, stock indexes and averages are simply a different way to measure changes in the market value of a certain group of stocks. However, these two terms tend to be used interchangeably, particularly when people are discussing the stock market behavior. While an index in stock market is a single number, calculated from the prices of basket from different stocks, indices on the other hand, is when you talk about more than one index. The most regularly quoted market indices are broad-based indices comprised of the stocks of large companies listed on a nation's largest stock exchanges, which includes the American Dow Jones Industrial Average and S&P 500 Index, the British FTSE 100, the French CAC 40, the German DAX, and the Japanese Nikkei 225.
In specific for our country, Bursa Malaysia has several indices providing investors with a comprehensive set of data which measures the performance of the major capital and industry segments of the Malaysian and regional markets. Bursa Malaysia indices are calculated using the market capitalization weighted method. Market capitalization means the total value of a listed company's shares based on the current market price. Therefore, the bigger companies are given higher weightage compared to the smaller companies. The index series of Bursa Malaysia covers all stock sizes within the market and thus provides the investors with a better tool to benchmark their investments according to their needs. For example, investors who embrace Sharia principles may inspire to benchmark their stock portfolio using the available Sharia indices like FTSE Bursa Malaysia Emas Sharia Index or FTSE Bursa Malaysia Small Cap Sharia Index instead of using other indices. The indices are also suitable for the creation of investment products such as ETFs, derivatives, structured products, and index tracking fund. Basically, all Malaysian companies listed on the Bursa Malaysia main market and ACE market are eligible for inclusion as constituents in any relevant indices, but of course, subject to meeting FTSE's international standards of free float, liquidity, and investability. The final part that you are going to learn today is on making securities transactions. Essentially, the main role of stockbrokers is to facilitate the buying and selling of securities for their clients. So, as an investor, you should select a stockbroker who has a compatible disposition towards investing and whom firm offers the desired services at competitive cost. However, most brokers nowadays start to offer online trading capabilities, and many brokers are expanding their services to include research and advice to their online clients too.
Shares are normally traded in specific amounts called board lots of 100 units. Any amount less than board lots is called special lots or odd lots. When the shares are bought or sold, the investors have to pay the transaction costs, which includes three main charges, namely, brokerage fees, stamp duty, and the clearing fees. A brokerage fees is a charge levied by a broker to compensate the stockbroker for executing the transaction process. These fees are usually based on a percentage of the transaction, a flat fee, or a hybrid of the two. Brokerage fees vary according to the industry and type of broker. You can check for online brokerage fees to make comparisons. Next is the stamp duty. The stamp duty is a charge imposed by the government, collected by broker on their behalf. It is 1 ringgit for every 1,000 ringgit of the transaction value of securities, and subjects to a maximum of 200 ringgit. Meanwhile, another charges, which is clearing fees, is a charge imposed by the Bursa Malaysia as a fee to the clearing house. The fee is 0.03% of transaction value, with a maximum of 1,000 ringgit per contract. You can now refer to the example given on how to calculate the actual amount that you have to pay when you want to buy and sell shares, taking into consideration all the transaction costs. We are now moved into the last slides of Chapter 3. In making security transactions, investors can use different types of orders to facilitate the process. The type of orders placed is normally depending on the investor's goals and expectations. Generally, there are three basic types of orders, and they are 1. The market order, 2. The limit order, and 3. The stop-loss order. Okay. Let me briefly explain the three types of orders. A market order is an order that shall be executed at the best available price as quickly as possible. Only the order quantity needs to be specified when a market order is entered into the system. Unmatched quantity will remain in order book, with highest priority status. A limit order, on the other hand, is an order which has a price limit specified at the time of entry. It is an order executed at the specified price or a better price. Buy limit orders can match at prices less than or equal to the limit price, while sell limit orders can match at prices greater than or equal to the limit price. An incoming limit order can match with multiple orders in the book at prices up to the limit price specified. The last type of basic order is the stop-loss order. A stop-loss order is an order placed with a broker to buy or sell a security when it reaches a certain price. Stop-loss orders are designed to limit an investor's loss on a position in a security. When a stock falls below the stop price, the order becomes a market order, and it executes at the next available price. For example, a trader may buy a stock and places a stop-loss order 10% below the purchase price. Should the stock drop, the stop-loss order would be activated, and the stock would be sold as a market order. In addition to the 3 basic types of order, Bursa Malaysia has introduced another 4 types of orders, which investors can place orders in the form of market to limit order, market FAK, fill and kill, as well as minimum quantity. To learn more about these new types of order, please visit Bursa Malaysia website under the equities section.
Okay, we have finished the topic from chapter 3. Don't forget to read your textbook for further understanding. Thank you to my assistant Grace and hope to meet all of you again in the following chapter. Assalamualaikum.